break down the warring line into 3 separate lines. We've covered this before. The first line I like to break it down into is XLK, XLU. I like to look at tech stocks against utilities. So when we look at tech against utilities, was this bearish or bullish coming into the open? Bearish. Remember, we get a pre-market on this as well. So we're actually able to tell what it's doing right through the whole pre-market. So we get some information. It's not the most reliable. Just make sure you realize that. It's not the most reliable. But we could already see that it was trading below. And then when the market opened, tech utilities was falling. Didn't rise at the open. It actually fell at the open from an already lower level. So tech utilities is dropping. Well, that can't be bullish for equities at higher prices. So that gives us an idea that the key reference level, which is the day high, must be a high probability sell trade, right? Secondly, I like to look at staples against discretionaries because you're comparing apples with apples on this one. It's a very reliable one to look for because, as I said, it is a direct comparison. And again, pre-market, not the most reliable. You're already getting a sense that the value is going to be lower. When the market opens and it trades into the highs, the value is just not in it. The value, in fact, is on the contrary. The value is well off those prints, well off the prints, even though the price is well into the highs. That gives you another idea that this is definitely looking like a short trade coming into those high prints. The final line is, of course, looking at financials against healthcare. When we look at financials healthcare, this hasn't been bullish for 2 days. Never mind at any stage today. This has not been bullish right through this phase. In fact, it wasn't even bullish over here. So when we see this change of behavior over here, you can see that this has been bearish ever since basically this seller came into the markets here, which happens to be exactly the same seller that came into the markets here and exactly the same seller that came into the markets here. A seller comes into the market because of value. So therefore, when you see this area up here, that's not a seller coming into the market. That's a liquidation event. So I'm not that interested. I'm not that bothered. I'm not that paying attention to this event here, this level here, because it's a liquidation event. It's not somebody getting new shorts. This is 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 somebody getting new shorts. And these are great opportunities to take the trade south. And that's obviously what we've seen this morning when it come up into that area. When we look at it on a 1 minute chart, you'll see a couple of key elements to any type of reversal. The first thing is, as we come up into the area, the first thing we see is the toxic nature of this break higher. But is it just a stop run? We already know that this idea of a stop run, potential top edge, we already know about it. But when we look at it from tech stocks, utilities, and we look at it from staples, you can see that there was a bit of buying pressure coming in here, and then the sell came in, and that left this bad boy exposed on this one candle here. When we look at this, one of the other things that's very, very important to us is market internals. There's a lot of great market internals, guys. Market breadth type indicators at highs, lows, the TICK, the PREM. When we start adding those to our thoughts, we now think that this will be a sell. We now think this is a great price to do a sell from. We obviously can add other elements to this. If I add other elements to this, I can look at it from the TICK itself. This is the TICK. Now, the one thing about the TICK is you sometimes get the perfect read, but you'll sometimes get, obviously it's a stochastic type based function, as in the way you'd understand it. It's bracketed, in other words. So you can see into the top edge that this had already started to sell off into the top edge there, rallying initially and then selling off prior to this turnaround into this situation here for that rally before the sell-off took place. You've also got the PREM, trying to find out whether the PREM is giving you trying to figure out whether the PREM is giving you what? A little bit of PREM. Now, what is the PREM going to show us? What did I just do there, guys? It's not very good. Okay, we'll try that one again. The PREM is going to show us liquidity, isn't it? The PREM is going to show us some liquidity. Now, this shouldn't be moving, remember. It's a flat line. So what it's going to do is it's going to start showing us liquidity. Now, we have to get down into a lower time frame to make any sense of what it's actually doing. So we will go all the way down into the lower time frames to see what was actually happening. Now, you can see that the original launch move was actually projected by some sort of buy programs. A buy program isn't when it spikes to the top side. That's the result of a buy program. The buy program comes from these balance areas going higher. So when you see that starting to go higher, you're thinking, right, the buy programs are starting. They're kicking off. Buy programs are kicking off here. That's going to add liquidity into the underside of these stock markets. And that liquidity added into the underside of the stock markets lifts the price out of that area beautifully. As we get up into the top edge, you can see there's a little spike, massive volumes, top tick price, value's bearish anyway, so we want to get short into that massive volume, and a perfect excuse to get short into that area. As the price now, one of the other things you can do, by the way, is if you don't like the PREM on the S&P against the SPX, you can use the NASDAQ against the NDX because it obviously has a little bit more narrative. It has a little bit more narrative. In other words, it's got a little bit more of a kind of a trending feel about it as opposed to the S&P, which is very, very straightforward. And when you look at this in terms of that kind of trending appeal, you can see a similar pattern, that very, very bullish move higher. And then it just collapsed, which meant that if you wanted to get involved in the short trade at that stage, it's almost a given that you can start working into that little bit of selling coming away from those prices. And that sell away from those prices, remember, this isn't now going to be up and down as a trend. It's not how it works. You can see that this sell program that kicked off here is a very directional move on the PREM. And the sell program that kicked off here gives this big rip to the downside, but that sell program is also given up into these bottom edges with the big volume surges, and that's probably the walkaway trade just there. So it's just about putting together some of these thoughts, isn't it? It's about putting together some of these narratives about market depth and various other things.